Well, here we go again, guys. Bank of Canada, another interest rate hike. And for many of us today, it's starting to take a hit on our cash flow. With Bank of Canada continuously increasing rates, this is a common issue that is impacting most real estate investors today. And then it comes to the real question is what is it that we can do about it, especially with further increases in the very foreseeable future? So I'm happy to interview today Alex McFadyen from the Thrive Mortgage Co., who is an expert mortgage broker and an investor himself, who's going to be sharing on the topic today of what's happening with the financial market today, reviewing what strategies you can utilize to offset some of these rates, and as investors, how best to manage through some of these challenging times. So I want to make sure that you guys watch it right to the very, very end to make sure you capitalize on all the nuggets that are being shared with you today to help you with your real estate investing business. If you haven't had the opportunity to do so as of yet, please do me a small little favor. Hit that subscribe button, hit the like button, hit that notification bell to help us grow our Savvy Investor YouTube channel as we are trying to continuously provide value to all of our listeners. So without further ado, let's get to the interview. Holy smokes, what a crazy day we had today. Bank of Canada, another half a point increase. My jeans are getting a little bit lighter. And again, it's not because of me losing weight. It is because cash flow is coming out of my pocket. And so we thought we'd bring in some of the big guns, Mr. Alex McFadyen from Thrive Mortgage Co., who is one of our expert speakers on Savvy Investor and also our Elevate Mastermind group as well. And I thought it'd be great to have him share some of his knowledge to help support us Savvy Investors to kind of provide us some insights of what we can do during all these increases. Alex, thanks again for doing this. I really appreciate that. I know your phones are probably just blasting off the hook, and so I really appreciate you taking the time to kind of have this discussion with me today.
Absolutely. Looking forward to it. The phone is absolutely on fire right now, but can't wait to talk to you and these guys.
So if you have been kind of under a rock and you haven't been paying attention, the Bank of Canada just recently announced another half-point increase to our mortgage rates. Yikes, right? And so for a lot of people, this is a little bit concerning and more questions and all this wonderful stuff. So I thought I'd bring the big guns over here to kind of talk about this because he is one of our mortgage experts and also a real estate investor as well. And so we just kind of talk a little bit about what's going on in this current market and what can we do to kind of help offset some of the challenges that are maybe ahead. So maybe, Alex, you know what? I could only imagine that your phone has been blowing up today and probably for the days to come. I thought it might be good for everybody that's listening today is, what's the overall reaction? So maybe, make people feel a little bit better that it's not just them, right? So
it isn't just them. The funny thing at this time around, Mike, is that I think people almost expected it. So the reaction was very different this time than perhaps what it was the last couple of times. It was also the fact that over the last 2 weeks, and I think actually this is the BOC intentionally planting this, the conversation was 0.75. And today, with the interest rate increasing, giving you a little bit of insight here, 0.5% above where it was before, I think perhaps there was a little bit of less nervousness than in the past. Now, don't get me wrong, there's still a lot of people that are concerned of the overall impact, and the bank did tell us, again, foreshadowing here, that they are intending to continue considering interest rate increases, probably going to happen.
Yeah.
But I'd say the attitude is maybe less negative than I expected, which is great.
Okay, so Alex, with everything that's happened, there's confusion. There's confusion in the market. They don't necessarily know what to do. A lot of people are riding variable rates, and the question is, should we be locking in right now? Should we not be locking in? I guess the concern that I think everybody's having is the anticipation of further rate increases and, again, further impact to their overall finances. Yeah. And so, what's your thoughts on this? Is this the time to lock in? Should we not? What do you think?
You should explore all options. You should always explore all options available to you. It's difficult to give blanket advice, as you know, but from a scope perspective, we always tell people, hey, listen, if you're even thinking about it, ask your bank for their lock-in options. Some banks will offer 3-year options or 2-year options or 1-year options if you have less time left in your term. And I think you should explore that, specifically in a situation where your budget can simply not handle any other increases. But before you do lock in, my suggestion is that you run it by a team like ours to review the market or at least give you some feedback. Sometimes a 5-minute phone call can help out with that sort of thing. The second thing is, if you are going to lock in, a few things to consider. Typically, the lock-in rate is higher than the variable rate, so you're going to instantly going to be increasing your payment right away as soon as you lock in. The second thing, for a lot of people, they've got their mortgage in the last 1 or 2 years. They're locking into a 5-year term, and we're locking in at all-time highs, where if we are going into this recession, we're going to see interest rates come back down. Most predictions are end of 2023 or 2024. If rates came down 1 or 2 or even 3%, how would you feel if you were locked in and you had to pay a hefty penalty to leave early? So there's other considerations besides just that factor, right? What if variable rates were to cut 12 months from now? How would you feel being locked in at 5.3, 75 or 6%? Right? So obviously blanket advice, but I'd suggest exploring it, understand your options. If there is a short-term solution, perhaps 1 or 2 years, maybe worth definitely looking into. But we're going to talk about that when it comes to refinancing and so forth in a second.
That sounds good. Perfect. Okay, so you know what? We look at what's going on with interest rates. We know it's impacting some of the markets, and actually most of the markets across the country here. And so with that being said, us savvy investors, we're wanting to buy and get really excited about buying properties. But in a lot of cases, there might even be some challenges in regards to the financing side. And maybe what we're hoping to get financed for a mortgage, maybe not actually happening. And I'm hearing a little bit of rumors that appraisals are not coming back maybe where they were. And I guess I want to get a sense, what are you seeing out there, number one? And the second part to that question is, what are you seeing your customer or your clients doing right now to offset any gaps maybe within their finance, trying to get that financing that they were hoping for?
Yeah, two points right there. So our Thrive clients, or Thrive family, if you will, we're seeing challenges right now when it comes to appraisal values being lower than expected, because people are still considering that the property values are the same as they were in the spring. And so when I ask someone for an estimate of their value, they're providing me with 800, but the neighbor just sold for 600. And so one thing right off the bat is there's a lot of people who are saying, yes, I want to buy real estate as an investment in the next few months because I see an opportunity. But we're saying, hey, let's get that refi done. Let's get that HELOC done. Let's get things set up right now because you're going to see a lower property value. So lower appraisals is a factor for sure. The second consideration is just maximum qualification there, Mike. You know, there's a lot of different ways, and we're very creative, but at the end of the day, we are limited to the solutions available to us. And people say, well, go with a no stress test lender. That's not always the option that's available to you. There has been about a 25% reduction in maximum qualification since the start of the year. That's impactful. Now, real estate prices have come down, but at the end of the day, if you're qualifying for a quarter less, that will impact your maximum qualification. Again, another reason to work with somebody who can look at the different options available to you. So appraisal values, timing, and maximum qualification are the three things. Otherwise, most everything else remains the same. People can still qualify. We can still look at your income. We can still use rental income. Lenders are certainly being a little bit more nervous about how much the maximum they're going to lend.
Yeah, that makes sense.
But overall, they're still lending. So
good. Business as usual somewhat, but at the end of the day, it's just got to be making sure that you look at all those options.
Bit more of a grind. Got to be a fast decision maker in this market, for sure.
Agreed. So one of the other questions I've got for you is, you know what? I don't know about your jeans. My jeans are a little bit lighter these days with all these interest rates going up. And it's not because I'm losing weight. It's actually the cash flow is not maybe as lucrative as they once were. I don't know about yourself. But for myself, that's the case. And so for a lot of your investor clients, again, they're probably reaching out to you and they're like, you know what, I'm not getting the cash flow that I was hoping at. What are some options and some advice that maybe you are giving? And again, it's important to maybe obviously talk to your mortgage advisor first and foremost. But what are some things that you are recommending, you're sharing, so then individuals that are watching this today are like, hey, that's a good idea. Any thoughts on that?
Yeah, no doubt. I mean, on a $500,000 mortgage at the start of the year with the rates at that time, you might have been paying $1,700, $1,800. Today, you're paying $2,700, $2,800. So you could have had a $1,000 cash flowing property. And if you have an adjustable rate, you could be seeing yourself underwater from a payment perspective right now. So there's a few things that you can do with your own mortgage. One is an obvious one. Look at your overall financial situation, right? Maybe not for everybody, but could you self-manage? Could you cut some money back that way? Not saying that's the right thing to do, but you could look at that, right, if you're really concerned. But let's look at the mortgage first. You can re-amortize it. We've had a lot of our clients, we've looked at their overall portfolio and we've seen, okay, 24 years, 23 years, 18 years, 17 years, and perhaps it feels like a loss. It really isn't. It helps set you up for success long-term. We all know about the ability, obviously, to write off a certain amount of interest. So we look at that as a consideration as well. Interest-only payments and mortgages are getting more creative. Longer amortization schedules, 35, 40 years. Really, what I've found for most people is you just need to do an audit of your own financial situation as well as your properties. Where are there different areas that you can cut back a little bit? And if you're at the end of the rope there, of course, and you've already looked at refinancing, you've looked at your other options, then I think you need to really just build it into your budget and ask yourself the question, can I continue to hold this property? Everything is one-on-one. Mike will tell you the same thing. We're never going to give blanket advice, but overall feedback is you should be looking at, like I said, refinancing. You should be looking at consolidation of other debts. You should be looking at your overall budget, right?
Perfect. Love it. Awesome advice. And I guess maybe just my last question to you, Alex. I know you're a busy guy. You got to get back to those phones and stuff like that. But last feedback. What would be your final kind of words to our savvy investors that are listening today, and what should they be doing tomorrow and the next day? What are some of those last minute tips that you want to maybe share with our savvy investors?
Yeah, for sure. So now more than ever, if you haven't done it, do that financial audit. Okay. There's a personal financial audit and then of course a quote unquote business financial audit. Smart. We're doing that in our personal lives again after a few months and in our business big time. You want to know your numbers. Where is it coming? Where's it going?
Great advice.
The other thing that you want to consider is how much more can you personally float if you're in a negative equity position or negative cash flow position, right? Mike, you and I were talking. This isn't the time to sell off your investment real estate. You really ideally do want to hold it because the reality is property values are declining. And if you can hang on and get through this storm for the next 12 months or so, you can put yourself in an amazing financial position for the future. These are the storms that we have to be able to weather in that time. So that's the first one. The second one is if you're thinking about doing the lock-in, if you're thinking about reconstructing the situation, get independent advice. If you're going to walk into your bank, just get the lock-in numbers. They're never going to really look at the scenario that's going to provide you with success on your overall financial picture. So make sure you're talking to someone that you feel confident and comfortable with from that perspective. Honestly, I found that a 10-minute phone call can make the difference in options.
Totally agree.
You know what you're looking at. I mean, that's simply it. If you are looking at buying investing, I guess the bonus tip would be if you're looking at buying in the near future and you want to get equity out of your home, which people still are looking to do almost every single day right now, get that appraisal done. Talk to us today. Let's sort it out and before the property values decline.
Okay, so Alex, thanks for sharing some of that information. I think it's actually really important for our savvy investors to be aware of what the actual impact with this half a point increase is going to be to the bottom line. So I know you're probably calculated this number 1.5 million times today, but maybe you can actually share it with our savvy investors and tell them what is that impact.
Absolutely. I mean, you can calculate this number in a variety of ways. So the general guideline right now is it's about a $15 increase for every 0.25% raise of 100,000. So let me explain that one more time. Because the rates went up a half point, that would mean today $30 of increase to your monthly payments if you have an adjustable rate loan. So $30 for every $100,000 is the actual increase. And that's for adjustable rate mortgages, okay? Now, if you're someone who has a static payment or a VRM product where the payments don't change, well, you might not notice a difference in your payment yet, but you're probably getting close to what we call the trigger rate, right? And most of you will have your banks calling you probably to say, increase your payments, or of course make a lump sum payment. You'll have to make a decision from that front. But the biggest thing at the end of the day is that approximate $15 change there. The second consideration is the qualifying power. So for someone who is qualifying for a mortgage yesterday to their maximum at the lowest variable rate, they've lost about $6,000 to $8,000 for every 100 grand they could borrow before, which is 6 to 8%. So basically, if you were pre-approved before to a variable rate, go times 0.92, and you're going to find out approximately what your maximum qualification is today. So it certainly has an impact, not a massive amount. Most people can overcome that, but there is something to consider.
Yeah, for sure. And I think for all of our savvy investors, again, we all know what our numbers are when we acquired a lot of these buildings. It's almost a good opportunity to go back and reassess. And it's like, okay, what's the impact now with all of these things and these increases that Alex has just highlighted as well. So Alex, great information. Thanks for the insight. Really appreciate your help and support for our savvy investors. Savvy investors, I hope you guys enjoy this information. Hopefully you've got some nuggets to help kind of execute things right away, making sure you're reaching out to your mortgage broker right away, making sure that you're not burying your head in the sand, and more importantly, getting out there and just taking some action. It's really, really important. So Alex, if people wanted to reach out to you and find out where to find you, where do they go?
Couple spots. So find us on our website, thrivemortgage.ca, our Instagram channel at Thrive Mortgage Co. If you're looking for more audio, I can't speak right now, but if you're looking to listen to a podcast, we talk about this and so much more on their podcast, which is the YVR Remo Show. We'll obviously, hopefully you can link that up.
We'll link it all up.
Yep. There you go. That's it. Simple as that.